So on the bottom of the screen, all right, I've turned off the DMIs of the ADX DMI indicator. And just for right now, we're going to focus on just the section that is called or referred to as the ADX. Okay. Now, the ADX part of this indicator, okay, this one singular line that you see going up and down and shifting colors, okay, this particular indicator that I've created shifts colors when it goes above or below certain levels, okay? When it goes above 25 on the indicator, the line shifts to a nice deep shade of blue. When it breaks below 25 but stays above 20, it turns this nice shade of orange. And when it breaks below 20, it turns this really nice, bright kind of whitey blue shade. Okay? Now, what you need to know about all of that and how that functions, okay, is on the DMI ADX indicator. All right? This is a 0 to 100 indicator. Okay? It can go above 100 and I don't think I've ever seen a time in history where it goes below 0. So this is essentially just a 0 to 100 indicator. Okay, the same way that the RSI is. All right. And with this 0 to 100 indicator, each one of these numbers represents basically, I'll say, kind of like a layer that you are looking to achieve. All right. And so when you see the ADX, all right, you can see when it shifts to this nice white blue colored shade here, right? That's when the ADX goes below 20. When this particular indicator goes below 20, what it is trying to tell you is that there is zero strength of trend. Okay? That's what this indicator measures, is the strength of the trend or the strength of the trending move that is currently in progress, okay? So when we see this indicator dip below 20, it tells us two things. Number one, there's zero strength of trend that is currently taking place. And number two, and one of the most important parts that you guys should remember, okay? Number two is that this shows us that the volatility and the velocity of the moves currently taking place are also really low. Okay? So now that we kind of have an understanding of the low side of the indicator, okay, what does it mean on the high side? When the ADX breaks above 25, it generally signals that there is a large strength to the trend or the trending move that is currently in progress. So in these moments where you see it way up here or way up here or way up here, what it is telling you is that the strength of that particular trending move taking place is really fucking powerful. Okay? So let's just say, for example, okay, now we haven't even looked at price action, but this is what we're going to do, okay? We're going to look at what happened to GameStop here from the end of March 2019 until the beginning of November 2019, okay? Because this shows a large strength to the trending move that was taking place from here to here, right? So if we open this up and we look at what was happening to GameStop at that very particular point in time, folks, look at the strength of the downtrending move that took place from right here, right, to the end when it finally broke below 20 again. Look at the strength of this move that happened. GameStop went down 70% in 140 days. Incredible, incredible strength of trend, right? So that's all you really need to understand about this indicator, okay? And the higher and higher and higher the ADX rises, the higher and more volatile and more velocity will be behind that particular move of that trending range that is currently taking place, okay? Now, I could throw in the DMIs and that will make things a little bit easier to understand, but we're not going to do that yet because I just want you guys to focus on this particular indicator, okay? Just the ADX for now, okay? The reason that I want you to focus on just the ADX is very, very simple, okay? So check this out. All right, check this out. So if I zoom in to our current bit of price action, okay? So we'll go up here, we'll zoom in a bit. All right, so here's price action, right? And then here's our indicator. And if we zoom in on our indicator, okay, I want you guys to take a mental note of something. All right. The ADX broke below 20 on August 13th of this year. Okay, this is when the ADX broke below 20 in August of this year. All right. Now, since that time, we have had a couple of little moves that have occurred in the middle of this range, but nothing of significance, right? Absolutely nothing of significance has taken place. Now, not only has nothing of significance taken place, but your ADX now has been buried under 20 for several weeks, right? If we measure from that candle to the close of Friday, that is now 52 days or 37 trading days that the ADX has spent below 20. Now you're going to ask me, Jackie, why is that important? Right? You're going to say, Jackie, why is that important? Now, there have only been a handful of times. Okay, there have only been a handful of times on GME's chart where the ADX has not only spent significant amounts of time underneath 20, but it also broke this trend line that I've drawn here at approximately 14. Okay, on the ADX, on our numbers on the side, there have been very few moments where the stock has both spent significant time underneath 20 and then also broken below the 14 threshold that I've marked off on this particular little horizontal line here. Okay, one of which you guys will remember very vividly. Right? One of which you guys will remember very, very vividly, which was our 9 weeks of hell. The last time that the ADX DMI indicator spent multiple weeks underneath 20 was back on January 25th of this year, and it stayed underneath until April 3rd. 69 days or 47 trading days where the ADX spent underneath 20, also going below that 14 threshold. Now, once it started to break out, right, the size of the moves that preceded it were pretty significant and explosive, 23% down in about 3 weeks. But then you guys obviously know the gigantic and unbelievable move that happened afterwards, right? So there's example number one, right? Where we saw the ADX spend significant time underneath 20, and that significant time underneath 20 while also reaching that 14 threshold led to two significant explosions in price, both to the downside and to the upside. Okay? Now, the next time prior to that was back over here, okay? Where the ADX breaks below 20 here on July 5th of 2023, and it does not get back above it for another month. So this one is not as long, I'll say. It's not as much time as what we're seeing now and what we saw back in the 9 weeks of hell. But folks, once again, when that ADX was doing absolutely nothing, it was preceded by significant moves both down and up. Now, they don't look like much, but if you pay attention, the significance of the move that happened to the downside, right? 40% down. That was 40% down from when that ADX finally broke out, showing strength of trend, and that strength of trend led to a 40% move down from when that stopped happening. So once again, another significant explosion on GameStop. Okay? Now, this is where the fun is going to begin, right? This is where the fun is going to begin. Because there are only two other times that we can reference, all right, where the time frames align with what we are seeing right now and what we also see on the ADX for how long it spends underneath, also dipping below that 14 threshold, okay? There are only three other times that I'm going to reference for you guys. And then you guys will start to kind of put two and two together here as to why I am anticipating that GME is going to make a massive explosion. Okay? So the next period of time was back here. Okay? September 12th, 2022. This came off of the back of the horns pattern, sending us down 52%. And when we sent down 52%, then you can see that price stabilized. And in that stabilization of price, it stayed underneath the 20 threshold basically every single day, with the exception of about 2 of them right here, right? Also dipping below that 14 threshold. Now, folks, once again, when this thing finally decided to start breaking out in significant fashion, I want you to pay attention to the size of the moves that were made on GameStop. Both to the downside, right? A 26% move down, which was then preceded by a multi-week 61% run to the upside. That is a significant move. Once again, being preceded by the ADX spending multiple weeks underneath 20 and also reaching the threshold of going underneath 14. Okay, so once again, we saw a 26% move down followed by a 61% move up. That is significant. That is volatile. The last time that this happened, excluding the sneeze, right? The last time prior to that, and which is the most exciting in my opinion, is back here. Okay? April 7th of 2021. April 7th of 2021 until May 27th of 2021. Now, you guys have actually seen me reference this area of price action several times before. When we have been looking at GameStop and comparing the price action, one of the things that we had actually been looking at was the fact that these structures, right, this significant move up, the sell-off that makes the U, and then the secondary U shape, right? We looked at this and we said, hey, what the fuck? That shit looks almost the exact same. Where it makes the sharp move, makes the bigger U, sells off into the large rounding U, and then that leads to this huge explosion. And what's interesting is if you look at the ADX and the DMI indicator at the same time, look at what happened. You broke below 20 here. Price stabilized in a range for several weeks. And then once the ADX started to break, look at the size of the moves that happened on GME. Just from the breakout of the ADX, that was 57%. And if you actually take it from the low of that move to the peak, that was 160% move to the upside on GameStop. So you guys can kind of start to understand, right? You guys can kind of start to understand why I am looking at the DMI and the ADX indicator right now, and I'm going, holy fuck, everybody better watch out. Because this thing has now spent several weeks, nearing 2 months now, of staying underneath 20 and well below that the 14 threshold. Right? And every single time that has happened, pairing it with the technical analysis that we have at hand, there have been ways to take advantage of really significant moves happening on GameStop. Right? Both to the downside and to the upside. So we're going to look at one more. We're going to look at one more here. Okay, we're going to look at one more, and then I'm going to explain how I am going to approach GameStop going forward. Okay? So now check this out. All right? Look at what happened before GameStop had its short sneeze. All right? Look at what happened before GameStop had its short sneeze. GameStop's ADX drops below 20. When it drops below 20, not only does it drop below 20, it spends several weeks underneath 20. Several weeks, right? 92 days, 3 months, 64 trading sessions. 64 trading sessions of GameStop essentially sitting in this range. But when GameStop started to break out and that ADX started to rise after spending several weeks underneath the threshold that we've talked about, folks, I don't have to be the first one to tell you that this was significant. Now, am I telling you that there is going to be a squeeze on GameStop? Well, we already know that that's eventually going to happen, and I can't guarantee you anything about what's happening with the current trending range of price action. But I'm going to do something now. We're going to turn on the DMIs now, okay? Now, with this indicator, you guys can see there's a yellow and a red line. The red line is the DMI negative. That speaks to bearish price action. The DMI positive speaks to bullish price action. When the DMI positive is super high up and the ADX has risen above 20, that generally signals that there is a large move on the bullish side. That's what we saw back here, right? That's why you saw a continuation of that move. That's why when everybody was panicking, Jackie and the Tits Gang weren't, because shout out this indicator. Strength of trend, DMI positive, ultra high, staying ultra high, rippy, thanks for the free money. Now, what's interesting about what's taking place right now, okay? Now, let me preface this by saying that it's still very early. Your ADX is incredibly low. It's arguably reaching lows that it has not seen in a full calendar year. And the last time that it happened, your DMI negative was above the positive when the ADX started to explode. And when that ADX started to explode with the DMI negative above it, that obviously led to significant moves to the downside. In the same regard, when you had the ADX exploding and your DMI negative was way up here, that is suggestive that the bears have control. And if you zoom in on this bit of price action, you'll see, look, bears had control. But when the DMI positive flipped and the ADX continued to remain elevated, that led to significant explosions on GameStop. Significant explosions. And what's happening right now, okay, is your DMI positive is staying above the negative. Your positive is staying above the negative. Now, I'm telling you it's early because the ADX is still way the fuck down here. When it's way down here, it is not telling us that there's a massive move taking place right now. It's preparing you for the massive move that's coming. And if you continue to pay attention to those DMIs, once that ADX starts to turn and rise, in the same way it did right here, right? That ADX starts to turn and rise here, and your DMI negative started to explode. So right here was roughly when people would start looking at establishing a potential short position based on the DMIs and the ADX, because they see it turning up after multiple weeks down with the DMI negative exploding as high as it is. And that ultimately, right, if somebody had done that and taken a short position from that, they would have done very well, right? 21% down. So this is why I'm saying with this particular indicator, now that it's all the way down here, okay, now we're paying really close attention to it because we know that there's an explosive move being prepared on GameStop. And with that DMI positive staying above the negative, as long as that positive DMI continues to stay above, if that ADX starts to rise and starts to show strength, you will begin to see positive, strong momentum on GameStop. And then here's the kickers, right? Here's the kickers. Because you add all of your other technical analysis alongside your thesis. Right? And one of the most important things to make a mental note of right now, right? One of the most important things to make a mental note of right now, okay, is that if that ADX starts to turn and rise, with the positive DMI staying above, you could potentially have a MACD cross that may occur right near the center line, underneath it, while the RSI may potentially burst through the center, burst through the EMA, and lead to a fucking explosive move from GameStop. That's on the bullish side. Now, on the bearish side, right? On the bearish side, if you fail to get a significant and meaningful breakout through the MACD, and the RSI rejects the EMA and rejects the center line, and then that DMI crosses, the DMI negative crosses the DMI positive and starts to rise as the ADX starts to rise, you can anticipate that there is going to be a sharp swing to the downside. Now, people will hear me say that and they'll say, oh my God, I'm so worried that what if it goes down? What if it goes down? What if it goes down? Well, guys, you have the ability to make money on GameStop, both going up and going down. Now, I know not all of you can trade options, and I can appreciate that. So if you can't, maybe you'll miss some of the action, because unfortunately there isn't a short ETF that I'm aware of just GameStop. Okay? But listen to me carefully. Let me make sure I say this loud and clear for everybody in the back. All right, make sure I say this loud and clear for everybody in the back. All right. I am not bearish on GameStop. I am not a gay bear on GameStop. I am a trader who has the ability to take advantage of large moves regardless of what direction they occur in. I am a long-term shareholder of GameStop. I buy shares, I don't sell them. I buy options, I sell them, I make money to buy more shares. Okay? Now that I've said that, I want you to understand something. Because I know that GameStop is going to make a large and explosive move, I do not care about okay, that's maybe the wrong thing to say. It's not that I don't care about what direction the stock moves in, but from a trading and emotional perspective, I don't care. Because I know that there are ways to take advantage of GameStop going both up and down, and using that to my advantage to then add further to my GameStop position. Right? So in my opinion, and how I'm looking to approach this, again, not as financial advice, right? This is from a professional trader's perspective and educational content only. I am looking at this as a perspective that if I know for a fact that there is a monstrous fucking move coming, because I've seen it every other time that it's happened using that particular indicator, then I should be spread. Not literally. I should spread my trading thesis on GameStop through a host of different type of options. For some folks, you're gonna sell covered calls, right? Because that's what you're comfortable with and that's what you like doing, right? For some folks, it's buying puts, and for some folks, it's buying calls. Whatever your prerogative is, right? Because I know that GameStop is going to make an explosive move, and because I also know that GameStop's implied volatility is relatively low, all things considered, I know that options contracts are relatively cheap. They're a little elevated, but all things considered, they're relatively cheap. And so if I know that there's a large move coming, right? And when I say large move, I'm not talking about $1 or $2. I'm talking, at least on the upside, I'm talking about probably a minimum of $7 to $10. And then on the downside, you're talking about a minimum of probably $4 to $5. So explosive moves in terms of the percentage, right? 20% down, and you're talking about 40% up, right? That's really significant. So if I know that, would it not be intelligent for me to look at the idea of being spread through some longer dated options that allow me to both stay away from the implied volatility should it continue to drop before that big move? And wouldn't it also make sense that regardless of what direction that move happens, isn't there a way to take advantage of that? Because I already know two things. One, options are cheap. Two, IV's low. So just as an example, right? If I bought a put and then I also bought a call, right? And again, I'm just spitballing, right? Let's say, for example, I bought a $25 call expiring in January, and then I bought an $18 put also expiring in January. And I said, well, I'm making a bet that GameStop is either going to move 20% down before the end of the year, or it's going to go 40% up before the end of the year. And then regardless of what happens, whether it explodes to the upside or whether it dies to the downside, the implied volatility is going to start to rise exponentially. And we know that because the ADX is so low that the next move that happens is going to be a strong strength of trend. And so that strength of trend is going to cause the implied volatility to start to rocket. And as that implied volatility starts to rocket, those contracts that you bought cheap and out of the money are now suddenly both in the money and also highly volatile, meaning that the options that you bought 3 months ago are now suddenly worth 1,000% because both the implied volatility started to skyrocket and the price mooned or dumped. And so regardless of the loss that you may occur on the other side of the trade, the win on the side of the trade that you ultimately end up getting should be so explosive and expansive that not only should it make up for the losses on the one side of the trade, but it should also make you very happy in terms of the potential gains that should be made on the positive side of things. Right? You see what I'm saying? And because I know that the ADX is telling me all of this, that everything is so cheap and so low and that there's a big move coming, it makes a lot of sense that if I was looking to establish some sort of options position, I don't need to spend boatloads of money. I just need to target specific strike prices that might be slightly out of the money with a lot of time to go. And I'm willing to bet, right? I'm willing to bet, right? Because that's what trading is, right? You're taking a gamble, right? And I'm willing to bet that this ADX is not going to spend another fucking 90 days, right? I'm willing to bet that it's not going to spend another 90 days at this low. Because if you start talking about that, that would be GameStop's longest period of time in the history of the stock ever that the ADX stayed that low. I'm willing to bet against that happening. And I'm willing to bet that there's going to be an explosive move that takes place before that period of time. Now, if I didn't like the idea of a spread, right? If I didn't like the idea of a spread and I thought that I could time a top or a bottom, one of the things that I would probably be waiting for is unusual whales. Because every single time that we have seen GameStop make an explosive move, whether it's been down or whether it's been up, unusual whales has always had a mega influx of multi-million-dollar orders just start boom, 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 boom. And when those orders start to come in, the price doesn't immediately start to adjust to it because somebody is accumulating a position to then make the stock do what they were hoping to have it do, right? So this is why I say if I didn't want to do a spread, right? If I didn't have the ability to buy puts, right? And I didn't want to be short on GameStop at all, then I would just sit there and I would say, okay, well, if I want to test my luck, then I got to hope that the next large batch of orders that I start to see is bullish, giving me reason to believe that the explosion could be bullish. And then you would lean on the bull side, right? Because of what you're kind of seeing here. But we've kind of outlined, ultimately the thesis that we anticipate to see at this stage, right? And then we throw in kind of everything else, right? We throw in a little bit of everything else, right? So we've got like our Bollinger Bands and our moving averages, right? And with our Bollinger Bands and moving averages, GameStop share price is right at the center of the daily Bollinger Bands as they continue to squeeze once again. Your daily 200 continues to rise through that pink box zone that we've marked off, which we know is incredibly important and still has yet to be tested since the Golden Cross, right? And so we know that there's all these layers of support down here. So if price got down here again, put in bullish divergence, tested the daily 200, showed reason that it was going to have support here, and that ADX started to go like this, and GameStop started to go like this, motherfucker, GameStop is going to fucking rip. The technical analysis said to manipulated stocks and blah, 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 blah. That's just what dumb people say who are too fucking afraid of putting in work. We have used this successfully on GameStop so many fucking times. It's not coincidence, and I don't get lucky all that often. It's because that's what the technical analysis says. You guys say that this is one of the most manipulated stocks in the stock market, right? If this is one of the most manipulated stocks in the stock market, then there's probably a lot of beep boop going on, right? If there's a lot of beep boop, that means that a lot of that beep boop is going to follow this beep boop. And if this beep boop says beep boop explodey, I'm going to fucking buy calls and get rich. But it doesn't have to be rocket science. It doesn't have to be complicated or complex. It's just technical analysis. And yes, it really does work. But this right here, folks, this indicator, paired with our other technical analysis, is showing us the GameStop is setting up for something explosive. And look at this 2-day. Like, this thing is setting up. It is setting up for an explosive fucking move. It just is. And if you have the patience and you have the skill or the ability to take advantage of this, this is the best time on GameStop. Because, guys, here's my favorite part. Here's my favorite part. Right? People have been complaining nonstop for the last 3 to 4 fucking months now. Ryan Cohen owes me. I saved his company, me with my 13 fucking shares. I saved the company, so he owes me. What if Ryan and the company announced something out of nowhere, and you had the wherewithal, the vision, the skill, the talent, the patience to have started loading a GameStop position just prior to a news event that you didn't know was coming? And then it explodes and you wake up one morning and the share price is up 160% and the calls that you bought are up thousands of percent and you've changed your life and you're crying because you're so happy. Been there, done that. One of the most exciting things that ever happened in my fucking life, bros. I'll do it again. Now, the last piece of analysis that I will throw your guys' way here. All right. We have a trend-based Fibonacci golden pocket here, folks. We have a trend-based golden pocket time zone that GameStop is going to start going through on Thursday, October 17th until October 28th. Now, there have been plenty of moments in time where these trend-based golden pockets have been incredible, and I'd like to show you a few of those examples. Okay? So, example number 1, right? Take your trend-based fib time zone, right? From the low of GameStop to the sneeze high to the next lowest low. And look at what that golden pocket produced the very first time that you went through it, chat. 50% move. That was from the original sneeze. That was the trend-based golden pocket, right? And then if we go over to this one, right? From the low to the high to the low. Look at the golden pocket that was produced in here as well, right? Now, this one, obviously, you guys can see was to the opposite side. But once again, look at the size of the moves that were made in the golden pocket. Okay? So now you've kind of understood, like, these golden pockets, these trend-based golden pockets. Boy, those sure seem somewhat important, right? Those sure seem somewhat important, right? Now I'm just drawing this here really quickly just to see. Yeah, that was the same thing. Okay. All right. So we have a giant one, right? We have a giant one that we are going through here. October 16th starting, right? End of day, October 16th until October 28th. Now, not only is that really exciting, right? Not only is that really exciting, but then if we also pull out just the regular fib time zone, pulled from the low of the sneeze event to the high, you'll also notice that shortly after we go through that golden pocket fib time zone, you have the 8th fib time zone of the regular one that occurs at the very beginning of December. Interestingly enough, the very beginning of December last year was when we saw a 50% rise on the share price of GameStop. So towards the end of this year, we are going through multiple fib time zones. Not only are we going through multiple fib time zones, but we talked about that ADX being at a record low. Putting these things into combination gives us reason to think that, yeah, GameStop probably not going to stay range bound for the entirety of the rest of this fucking year. It's probably going to make a giant fucking move. Now, if you don't know this either, right? One of the things that we did when we caught the original move with GameStop at the $10 lows is, interestingly enough, there was actually a giant Fibonacci time zone that either happened right before or just shortly after GME started to boom. So look at that, right? Look at that. Just before the cat came back, a Fibonacci time zone pulled all the way from the low to the high of the original sneeze. That fib time zone somehow magically aligned days before the cat came back and sent the stock to fucking Pluto. And so now we have another really significant and important one happening at the beginning of December and at the middle of this month. Folks, stay excited, stay focused, stay patient. But if you have the ability to take advantage of these moves, both up and down, I am telling you now, GameStop is going to start getting crazy. And Lord forbid, one random announcement, one random move, one random thing sends GameStop to the fucking moon, and you started establishing a position just before that event happens, folks. That is the life-changing trade that people search their lives for. And all it takes is one. Because you know this stock. And you know that at any given point in time on this particular stock, anything goes. Are you ready to take advantage of this move coming?